Hi Nick, how are you?
Good, how are you?
I'm good, thank you. Have you ever wanted to reap the benefits of owning real estate and mortgage-backed securities without actually having to manage them or invest a large amount or even take out a loan?
Sure, I was thinking about it this morning.
Perfect. I can show you how to do that, and we can do it right from your phone today. So how we want to do that is by investing in iShares Global REIT ETF, and we'll talk about that today, but first I'll tell you a little bit about me. My name is Camilla Gabrin. I graduated with a bachelor's in finance and real estate from Florida State University, and I'm currently an MSF candidate at Florida Atlantic University. And of course, I would love to be your financial advisor and guide you throughout this process. So, about iShares Global REIT ETF, it is an exchange-traded fund, which means they own multiple shares of real estate investment trusts, and these trusts invest in both equity and debt, which means the trusts actually own and manage these properties, and they buy mortgage-backed securities so that you don't have to. They take care of everything, and they do this in the US and abroad. This REIT is owned by BlackRock and is mostly passively managed because it tracks this index right here, the FTSE. And today we'll talk about the benefits of this REIT ETF, and we'll assess any worries that you have, and then we'll talk about how it aligns with your needs. So some benefits about this REIT ETF are diversification, dividends, low cost, high efficiency, and liquidity. So about diversification, 70% of their holdings are in the US, and the other 30% are elsewhere. So like Europe, Asia Pacific, which is like Korea, Japan, Australia, and then Canada and other developed countries. Okay. Another part of this diversification means that they have multi-sector holdings, so they don't overly invest in one. They have industrial, residential, retail, healthcare, and office space. This is good because if one sector is down, like at some point office space was, we have other sectors to make it up, and it keeps our stock stable, our ETF stable. Another great thing, which I mentioned earlier, is they own equity and debt. So if one thing is down, we have the other one to balance it out again. Another great benefit is dividends. These dividends are quarterly, so they're paid 4 times a year. We have here like some data for dividends for this year. We have the first 3, which has already happened, and then we have an estimate for the next one, which is just the same. We're just estimating the same number as the previous dividend, so this could change, of course, and then that would add up to 0.76 cents per share for this year, and then that's our yield, 3%. Even though this might seem like a small amount, it actually could be a lot more because we plan to buy multiple shares, and that really adds up. And this dividends tie into cash flow to finance your projects, which is what we discussed earlier that you wanted to do. So this would have money coming to you quarterly, so you can do whatever you want to do. You can invest it, you can of course use it for your projects. And this is more data about these dividends in the past 10 years from 2015 to 2024, and these are the numbers for the whole year. So it would actually be paid quarterly, but this is what it adds up for the whole year, and this is just an average from those 10 years. And then our yield for 3.6%, which has a certain deviation, of course, because they were a little bit different throughout each year, but it's about average about that. Another great benefit of this ETF is low cost, high efficiency. So our expense ratio is 0.14%, which means it's a really low cost compared to other ETFs. And how we do that is by being passively managed. So there's no much managers making decisions here. They're just tracking a basic index and making some minimal decisions. Another thing is it's highly tax efficient, because all ETFs in general are highly tax efficient, because the way they work is they give most of their profit to their investors as dividends, so they're not generating much taxable income. And another thing they do is if they have large investors that want to cash in on their shares, so what they do is they just transfer the shares to that investor of what they're actually holding. So if they're holding shares of multiple REITs, they'll give a part of those to that investor, rather than what others have to do is they have to actually, like other REITs, not REIT ETFs, what they have to do is they have to sell these shares, cash in on those shares, like that counts as taxable income, pay on those taxes, and then give money to the investors that want to cash in on their shares. So what ETFs do instead is they just give you some shares, and you can do whatever, you can cash in on those, and then you pay the taxes. But by you, I don't mean us, I mean large investors. So they minimize any taxable income for the ETF itself and for its current shareholders. Another great benefit of this ETF is liquidity. So unlike REITs where you can only trade them once a day, this one just trades just like a stock, which means we can buy it, sell it multiple times a day, every day, 9 to 5, no issues, and then it has no redemption fees like REITs do. This ETF is literally just like a stock, so it's super flexible, and it gives you that control over your money. So now we can talk about any worries that you have and some risk that we're taking by investing in this ETF. So my assumption is that you'll be worried about the lack of active management and how during some down periods in the market, this will cause you to lose some money because the managers aren't like quickly selling and managing the risk here. So yes, there will be some down periods, and I'm guessing you're worried about this because of course we all want our money to be safe, we want to minimize losses, but we'll talk a little bit about that and why we shouldn't worry about it. But I also want to ask if you have any other worries.
So far, I have no questions or worries.
Okay, perfect. So a reason as to why you don't need to worry, next slide, is long term these ETFs actually prove to perform better than actively managed ETFs. Of course, not every time, there are always exceptions, but most of the time this is what happens because yes, maybe in some down period this manager is minimizing things, but long term, just like it goes here, we have down periods, up periods, down, and it proves to be stable. Of course, not perfect line, but it does prove to be stable long term. So typically passively managed ETFs do better. And another reason for this, for these costs to be low, and also for long-term performance being better, is that we have no management fees, so you're getting all of your money back almost, and rather than paying high managing fees, so you're actually getting less return. And then you're also minimizing manager risk because the manager isn't constantly making decisions. They make the least decision possible and just track this index, so there is minimal error. And then we talk about how this ETF actually aligns with your needs that we discussed earlier in our meeting. So we have income to finance your projects, which is what you mentioned you wanted. So we have those dividends that we spoke about earlier that would come into your account, and you can just use that income however you want. Then you want it to increase wealth. The share value has increased, which I'll show you a chart later, but share value doesn't always increase, but it typically does, so that gives us income coming in and also increasing your wealth as well. And then based on what we talked about risk-wise, you were willing to take some risk if it proved to pay off. Like you weren't gonna super safe, you wanna be with your money, you were willing to take some risk. So this is an ETF, which is highly diversified, so it does minimize risk there. We shouldn't be too worried, but it is mostly passive managed. So that means during some down periods, there will be down periods, we'll see that, but like we spoke earlier, you're willing to take some risk. So as long as we're okay and understanding that it will be down periods, but we'll come back, then everything should be fine. So after all of this, of course, I think it is ideal for you to invest in iShares Global REIT ETF. It will allow you to earn income and also increase your portfolio value from real estate investing. Some of the main benefits were diversification, dividends, low cost, high efficiency, and of course liquidity. And then now with the request of this, I would just love for you and I to sit down and figure out how much you want to invest. And of course, also we want to think about these down periods and how we're going to handle them. How are you going to get to make yourself calm and understand that everything will be okay and not be desperate, not be stressed due to these investments, just so that we can be better prepared. But thank you so much, Nick.
Thank you.